again for another episode discussing everything real estate, personal finance, and specifically today, Bank of Canada came out with another surprise rate hike, and that's the third rate hike this year. The last one was a surprise. Something like 80% of economists didn't expect a rate hike, and then they delivered one, and they did it again today. This time, the majority of economists expected the rate hike that we got today, but still both surprises. If you had given 10 economists a survey back even, it would have been like 4 or 5 months ago, you would have never seen the consensus be that rates are going to go higher into this year. Most people thought there were going to be hikes in January, then pauses, and then rate cuts into the fall. That's been wrong. I've been on this channel for, I guess, all year now saying that is wrong, that I think that inflation isn't going to go as easily. The last few percent of inflation, as core goes from 5% back down to 2, because right now core inflation is around 5%. To get to 2 is going to be a long haul, and you need the Fed funds rate much higher than the current prevailing rate of inflation, as well as the 1 year on inflation. However, today's report came out in the US, and we got US inflation, aside from the Canadian stuff. US inflation actually had a really great read today, which caused the markets to rally. And I'm short, of course, 3-1, so I am feeling the pain of that quite a lot. It is, obviously we hit not all-time highs, new yearly highs, near new 16-month highs on the NASDAQ. Companies like Apple are at all-time highs ever. So if there ever was a recession, you couldn't tell by looking at the stock price of Apple and several other big tech names. So that's an interesting observation I'm just going to make. Typically what you want to see in an inverted yield curve where the Fed is actually ahead of the inflation curve is you want to see bonds outperforming stocks. Bonds are way, way, way underperforming right now. We're seeing bonds do much worse compared to stocks. Look at the NASDAQ. NASDAQ's up over 40% year to date. It's having its strongest year to date in 50 years. So the NASDAQ's up having its strongest year to date in 50 years. Now, part of that is timing. We were coming out of a bit of a recession. Are we in a bear market rally? Hard to tell. We haven't hit all-time highs on the NASDAQ yet, so we haven't retraced everything back to where we were, a year and a half ago at the highs of, I think it was November or December of 2021. But we're getting close. And if you look at individual businesses, they're suffering. You look at the jobs reports right now, the economy's strong. They're creating jobs. It's softening, but strong. And the interesting, sort of tidbit there that I found when I was looking through that report was, I found it very interesting that the top 4 producers and almost like 80% of all the jobs being created were government funded right now. So public sector jobs, public sector construction funded projects, there was like social work. It was all like public sector funded jobs right now. So the private sector is suffering and there's massive pain. The public sector doesn't care about private really because public sector just prints money. They don't care if interest rates are 8 or 9%. They'll just print money. So it's interesting to see that the government is actually, not only have they spent us into this inflation crisis, and they continue to spend and print us into with these $1 trillion investments into the economy, they continue to prop us up. So it's made my thesis wrong in some ways. Now, had I shorted the S&P 500 even, it would be much better than shorting the NASDAQ, because again, the AI bubble that we're in. If I had shorted the TSX, the Toronto Stock Exchange, it's almost flat on the year. So that would have been fine. I would have had faded decay over the year on those contracts I was selling, and I would have actually made money. And if I had shorted the Dow, I'd be making money. Again, if I had shorted the Russell, there's so many other indexes I could have chose. I chose the NASDAQ. Unlucky, very unlucky. And I hope that it corrects. If it pulls back even a little bit, I'm probably going to cut my short just from a time management and stress management perspective. I've found this to be something I don't enjoy. I'd rather be dealing with real estate problems. I'd rather be buying businesses or buying, properties that are businesses than trying to time the market. And I'm reminded again of the famous words of many of my favorite investors, one of which is Warren Buffett. And that is the first rule of investing is don't lose money. So have stop losses. And more importantly is don't forget rule number 1, right? Also, don't short and don't try to time the market. Plan to hold. And another interesting thing is too, like in real estate right now, the market sentiment has started to shift big time in Ontario. We were up 10% since January to, I want to say end of May. And now we started to pull back like 5%. And I don't know that residential real estate really will collapse. Like my forecast right now, if you follow me on Threads, I went and got it and did a couple posts. I talked about some of my forecasts there. And I don't think that necessarily we'll have a big collapse. I think probably we'll just trade sideways for the most part. And that's because there's such a supply-demand imbalance that exists. And there's so many new immigrants, especially in Canada. We have 1 million new immigrants a year coming in. That's like 2 to 3% of our population coming in every year. And we're building like 1/10 of the available housing that we need. And it's really hard to build right now. It's an expensive build process right now. Contractors still want too much per hour. Like they've been increasing their wages. And again, this could lead to a wage price spiral because certain sectors like construction are demanding more money than ever. So they want more labor money than ever. And materials are still really, really expensive. And so you've got that high input cost, which makes it difficult for prices to fall. So there's a lot of upward pressure holding prices. And so I think commercial real estate potential, like in office, industrial, your shopping malls and retail, that could really suffer. A lot of that's based on a 3-4 cap rate model. And the prediction was, hey, by end of 2023, it'll be fine. Everyone's like in 2022 started panicking. And they're like, hey, but by 2023, in a year and a half from now, in 2023 fall, rates are all coming back down to 2%. We're going to be fine. And when we renew, and people look at their renewals, like, oh shit, I'm renewing in like 2024 January, and it's 2022. I got 2 years, I'm okay. And then they found out like, hey, it's going to be higher for longer. And 2024 is going to still be painful. And all those renewals where they have to lock in for another term, they're going to destroy at 7%. In a lot of cases, that doesn't make any sense. You're borrowing at 7% and you're making a 3 cap in the building. That doesn't make sense. So a lot of this stuff in commercial space doesn't make sense right now. Now, there are lots of pockets that make a lot of sense, and there still will be, exceptions to every rule. I'm talking about averages by and large. Certain states will perform better than others, certain provinces will perform better than others. But in general, I think that commercial real estate, specifically like office, retail, that sector is next for doomsday knock and potentially could scale into another, I guess, escalation of the banking crisis. So that's a real possibility, and that's my sort of outlook on that. In the next 6 to 12 months, we should see that. So there may be opportunities in that space potentially to buy that. And there's also trends like people are working online now, and with the advent of work from home policies and technology supporting those work from home policies, people don't need to go into the office anymore. So you don't need as much office space. And people don't want to buy in brick and mortar anymore. They want to buy online. It's easier. So all of a sudden, you don't need as much brick and mortar retail space either. So that's another thing for shopping malls and things like that. There are challenges. And some of those stores may still need the same footprint, but are generating less dollars per square foot. And so if they're making less, then potentially, and there's additional availability, the revenue may fall in that category. Well, at the same time, your interest payment was here, and now it's here. And all of a sudden, maybe you had a little bit of cash flow, and now you have less. And so that's a bit of a challenge that we're going to be dealing with going into 2024. My forecast is rates are going to come down. They are going to break something. It's going to take about a year from where we are now, I think. And I don't know how long it'll take exactly, but rates should start coming down. They're going to keep going higher. The Fed's going to, in the US, is going to hike again. In the next meeting, it's end of, I think, July 30th or 31st, the FOMC meeting. They're going to hike again. That's happening. There's like I bet money on that. That'll happen. Whether we get another one after that, I don't know. Or whether they pause. And pausing, by the way, is as painful almost as hiking, because the economy can't survive at 7 and 8%. Everything was built on 3% money for the last 2 decades. And the price of everything has ballooned to the point where like a lot of these businesses, and like real estate included, it can't sustain at those levels. And so it's interesting to see. And again, there's both sides of this. I'm just trying to share both sides. Like those are some downward pressures on real estate. I think there's a very good likelihood we won't see a lot of appreciation in the next little bit. But if you have a good cash flowing property, hold. This might not be the best time to sell. My thought is there's fear right now, right? And as the fear starts to build, like we just had a really good inflation report. And my thesis is, if you look at 1 year ago, inflation had peaked and then it started to fall dramatically as gasoline prices fell. And gasoline's down like, I think almost a third of the price from where it was a year ago. So the 1 year read coming out at 3% today on the 1 year annual looks really great. And everyone's like, wow, we're expecting 3.1 and it came in at 3. And it's like, next month it might be 4 or 5. We may get an annual read into this fall that's rising a little bit if we get, a really hot summer, which I think we're going to see. And there's been a lot of stock gains too. Crypto's come back 60%. A lot of these stock names, like pick any of the big tech from Meta to Tesla, a lot of them are up 2 and 3, Nvidia, 300% off the bottom. That's a lot of wealth pumped into the system. There's still a lot of capital sitting there. So people have money and people are still spending money, too much money. And the whole point of raising rates is to get businesses to contract, get people to stop spending. And that's how they basically control it on the demand side. It's hard to control supply side. Supply side issues are fixed now. You can't really blame inflation on supply chain issues anymore, I don't think. Maybe you could say a little bit to that conflict that's going on between Ukraine and Russia, and that's been kind of a stalemate for well over last February, I guess. It's like well over a year anyway. And I would say that there's definitely a lot of opportunity is actually the synopsis I'm seeing going into this winter. I want to be buying into this fall and winter because there's going to be mass panic and people are going to be refinancing and they're like, shoot, I can't carry this. Or maybe the bank says, hey, you qualify at 3%, we're not going to renew you at 7%, sell, or face massive penalty. We're not charge you a penalty to renew. And they have the right to do that, right? So there's some challenges potentially going into this cycle where I think people will be forced to sell. So there may be really some great, maybe some great opportunity this in the next year in 2024. So I'm predicting January as a buying bottom, December, January. So December of this year end into January, we're going to see potentially a bottom for real estate. That said, if rates stay higher for longer, we could see the following fall, winter of 2024 be the actual bottom. But I think the bottoms would not be far apart. So we might see a little rip in the spring and then back down. It tests a new low. But again, like how much further downside is there? Not a huge amount. Like I'd be surprised if we saw more than 10% pullback on residential real estate at this point. So for me, that's, if you have a $500,000 or $400,000 building, that's another 40 grand of loss maximum. So don't panic sell, don't go crazy. That's where you lose money. What you want to do is when most people are panicking, you want to be buying, right? And we buy assets that we can hold for the long term so we don't have to panic sell and we can wait for the price that we want. That's how we invest in real estate. We don't panic, we don't speculate. As investors, we never want to make emotional decisions, right? We want to be looking at things analytically and say, hey, does this property make sense to keep in the portfolio? Could we get this price for it? If we didn't, would it make sense to hold this property instead, right? For me, a lot of it is like I have really good opportunities to buy. And so it's really hard for me to hold because I can see so many other better opportunities at 20, 30% off that to hold at market value is sometimes a challenge. But again, what I'm not considering in that equation is the time and energy and effort it takes to restabilize a property and then to get that property into a holding position. It's a lot of my time. There's only so much of that time in a year, right? So that's something that I've been factoring in lately. Okay, to the Q&A for a second. I wanted to go on my little rant. I wanted to share, my synopsis on where I thought things were going. If you guys have any questions, you want to take this further, you want to dive into a trench, let's do it. That's what the Q&A is for. So into the Q&A. David says, hello from Alberta. My mortgage is coming up for renewal in a few months. Oh, I'm sorry to hear that. A lot of people renewed in 2019, and so they were on 4 or 5 year terms. In Canada, like pretty much everyone's on a 2 to 5 year term. And so in Canada, we're very sensitive to rates. And people are going to start, like they missed it in 2022. They're like, woohoo, I missed the refinance in 2022. But like I'm come due in 2024. In 2023, they missed 2023. Yay. 2024 might still be bad too. In which case, like you're locking another 5 year term of pain. And a lot of people, when faced with that prospect, are like, I'm just going to sell, as opposed to locking in for 5 years of negative cash flow. What is involved with switching banks in personal? Looking to switch from RBC to Scotia. RBC makes it more difficult. Criteria after 4. So there's some challenges, I guess, to switching. The thing is, in Ontario at least, I don't know if this is true in Alberta, but it probably is. When you have a term and it comes due, they'll give you new renewal options without you having to qualify. So you'll get options. You can negotiate on the rate a little bit. You can even say, hey, competitors give me this and that. But to go to a competitor actually requires you to apply and get approved again at new stress testing rules. In Ontario, the stress testing rules are so bad you have to add +2 to the mortgage rate to qualify. So I was actually sharing some stories about this because it was crazy to me. I didn't realize this was a thing, but there's this thing called the Brampton mortgage or Brampton loan. And it's basically like something like half of all mortgages in the GTA are like related to mortgage fraud. And I had no idea agents were doing this, but like everyone's just like faking their documents. And then some people are sending me data and they're like, yeah, of course everyone does this. And I'm like, what? Everyone does this? Like everyone's cheating on their mortgages? I didn't realize this was a thing. And they're like, yeah, like no one can actually qualify in Toronto or Vancouver and we all have mortgages. And then I looked at it and I'm like, what is the stress testing rules? And I'm like, oh geez, the average house in Toronto, you have to make like $400,000 a year to qualify. And 0.01% or 1% of the population makes that. So 99% of people can't have a mortgage in a big major city in Ontario and in Canada, really in Vancouver too. And I'm like, geez. And then I looked at like the amount of charges, and there was apparently like 20,000 applications and like thousands of agents, and they're all from like Brampton apparently. A lot of them are Indian. I don't want to be racist, but like it was interesting that they were mostly foreigners. There were some Asians on that list too. It wasn't just the Indian culture, but I found that interesting that was almost like a people were sending me messages, and I don't believe this, but they were saying, hey, it's a cultural thing. Like in the Indian community, when you're a foreigner, you come here to get a house, you're an entrepreneur, you can never qualify. So you make T4 income. I was like, whoa, this is a thing. Mortgage fraud is a thing. What that says to me is there's major problems and cracks in the current Canadian banking system. And it's so easy today with the way technology is. You go on Fiverr and get documents made up. So it's like, and I was exposed to this. I was like, wow, I can't even believe that this is a thing. And I don't support it in any way. I think it's disastrous potentially. Now, if these people don't foreclose and they pay their payments, is it a big deal? No harm done. But could it potentially lead to higher default rates? These people shouldn't have had mortgages, and they do. And when I found out it's like a large percentage, like the majority of Canadians with these mortgage balances can't qualify, that was interesting to me, that this sort of black market of mortgage fraud exists, and it's not small. Like it's huge, and it has to be, because otherwise Canadians would never qualify for these mortgages. And I was like, oh, that's a symptom of potentially an imbalance between income and house price. And so anyway, back to your question. Sorry, I got down a rabbit hole there, but it's been on my mind this week, like how crazy it is out there in the housing market in Toronto or in Vancouver, where in Vancouver, like a house is $2 million. Like a crappy average kind of house is $2 million. And so how is that sustainable? Like at a 6% or 7% interest rate, you're paying just in interest alone before property taxes, before maintenance, before insurance, utilities, all the other costs, probably double the mortgage payment. Your mortgage payment alone is like $10,000 a month. Like for it to be a 30-year income, you'd have to make like $300,000 a year. Most doctors in Canada don't make that. Most lawyers make like 6 figures, right? They don't make enough to carry that after tax. Our tax rate's 55%. So if you make $600,000 a year, okay, you'll make $300,000, $250,000 after tax, and all your money goes to your house. You have no money for a car, no money for trips, and you're a doctor or a lawyer? Like what? The top 10% of society can't even afford it. There's a problem. It's a symptom of a greater problem. There shouldn't be that much mortgage fraud, but there is, because no one can actually qualify on their own, which is crazy to me. Anyway, I just wanted to share that because that was a crazy epiphany. And maybe I was like, I guess I was living under a rock this whole time as a real estate investor, because apparently like many investors I know, dozens of investors I know were like, dude, you don't do this? Like, what? Everyone does this. And I'm like, they're like, how are you getting mortgages? I'm like, I'm grinding like 6 applications, and I'm using high net worth programs and like parking money and like showing it there for 90 days, and it's costing me tens of thousands of dollars to qualify for these. And they're like, no, like this is what everyone else is doing. And I'm like, whoa, could I have so many more mortgages if I was willing to break laws? Like, I'm just not willing to cross those boundaries. But it's just like, wow, I didn't realize that I was competing against, like my competition was out there cheating. And so yeah, it's an interesting epiphany. Como says, Carvana treating me good. I don't even know what Carvana is. Christian says, hey, Mike, thank you so much for your time and knowledge. As always, appreciated. Thank you so much. Appreciate you for coming on. Again, this is free. So it costs you nothing. I give it every week. I value my time at least $1,000 an hour. So you're getting access to at least 50 to 100 grand a year in free value by just tuning in today. And you can ask me anything you want. I'm happy to answer it. And I do private calls as well. And one of my goals for this year is to be more efficient with my time. And so I'm trying not to give freebies away anymore. I do a lot of offline Q&A, where people ask me questions. I'm trying not to do that. I'm trying to build some sort of like coaching business or put a value on my time, build some sort of program or membership. I want to do something with that. It's just the time to build that it's not something I have right now to give. My family is kind of my main focus right now. And I got 3 really demanding kids. I really do. And maybe I put that on myself, but I feel like I have to live up to that standard. Rocky says, hey, Mike, will this fall, winter be a good time to buy another student rental? Potentially, yes. I think that this fall and winter is going to be a really great time to buy. The thing is, you can never tell when you're in a bottom, right? And so what I could say is that when I'm surveying the landscape and I'm watching Instagram stories and watching Facebooks, I'm talking to other real estate investors, I'm seeing fear and I'm seeing pain. And in the last 2 weeks especially, the market sentiment just shifted. There's a lot of unknowns. How long are rates going to be high? Is it a year? Is it a year and a half? When? We were all sure that it was going to start coming down in 2023, and the Feds assured us that's not happening. But do we trust them? They've lied before. They've been wrong before. I mean, they were on camera 2 years ago saying rates would never go above 3%. I don't know. But I know that when there's a lot of fear, a lot of uncertainty, and a sector is suffering where almost no one can qualify, and real estate is very difficult to qualify right now, that creates opportunity. And so there is an opportunity potentially to be buying. This isn't a great time to be selling, it's a great time to be buying. The spring, I was on a few streams ago and I said in Ontario, we're up like 10%. It was a good time to sell. April, May were good times to sell. The summer is not a good time to sell. The winter is not a good time to sell. Unless you're in a, like that's not true of every market. So Florida, as an example, their busy season is January, February, March, April. So that's like their hottest time to be selling. Whereas like now is their slow season. And it's like hot and rainy going into like rainy season and hurricane season and stuff. So it's not a great time. So it also depends locally on your market. But here in Ontario specifically, not an amazing time to be selling in the middle of summer. Not a great time to be selling in the winter either. The ideal time to sell is like March, April. April really is ideal. April, May is like the perfect time to sell. It's like the peak seasonal difference of like 10% fluctuation in seasonal demand. And that the data actually supports that. So that is true. There's hard data for decades to back up a 10% fluctuation between peak season and slow season, which on $1 million house is a $100,000 difference potentially. And there is $80,000 to $100,000 differences between the peak and the trough. And it's hard to sometimes delineate that because there is appreciation and depreciation happening at the same time. But if you adjust for those, there is a seasonality that exists in real estate. So be that what it will, you can take advantage of that opportunity. All right, next question. And the last part of your question was tough to predict a crash or bottom. Totally true. Trudeau has increased immigration. So true. There's a lot of upward pressure in Canada. The government is trying to prop up housing because it's one of our main contributors to GDP and economic productivity in Ontario specifically. So they won't let it fail. And that's one thing I learned about shorting too, is like, you gotta be really careful because the government doesn't want things to fail. And they will change the rules. They'll change the definition of inflation, which they did again this year. They will manipulate things. If you calculate inflation the same way they did in the 80s, the same consumer basket of goods, inflation was double digits, well into the double digits, and continue to be. So it's interesting how they manipulate the equation to look better now for them. And they'll just stimulate and print their way out of anything and kick the can down the road for another generation to worry about in 10 years. So that is a reality with playing the bear side. So be careful, guys. My thought is you want to always be the bull. You want to always be focused on the long term, but be very careful. Analyze your deals very carefully. In times like these, you want to underwrite very carefully and make sure that your numbers really do work. Next question was from Gurinder. Hey, Mike, hope you're doing well. Once you close your short, will you be buying long positions with tech or just get out of stocks altogether? So I will probably put a small position into the S&P 500. I will probably put a small position into the NASDAQ at some point. I need the tech exposure. I can't not be, on those positions, but I won't be trading anymore. So I will have a position that I will not be checking often. It'll be like a once a quarter thing that I just kind of looking on. I will not be trading. I'll not be checking it daily. I'll be in the long direction and I'll probably hold mostly quality companies, but the majority of my net worth is no longer going to be in stocks. I'm going to shift my wealth into lending businesses, into primarily real estate is actually the place I'm going to park it because I'm in control of that asset class. And though real estate is not very liquid, I'm able to grow my net worth faster over time and more tax efficiently over time as compared to trading. So for me, it's about a shift in mindset. It's about a shift in values too. Like even if I could outperform the market, I can't. None of us can. But even if I believed that I could, the energy it takes to do that and the emotional toll you go through and the roller coaster to get there, I just would, like if you could tell me I can make 14% trading and I can make 10%, doing like real estate, I would much prefer 10% doing real estate because I don't have the stress associated with the roller coaster. Like it keeps me up at night. Today, as an example, was a 6-figure down day. I lost about 6 figures today. And it's emotionally, that's very hard on me. Like watching and trading and trying to execute. And so that's a challenge that I'm facing with trading. And I would just like to not have that in my life anymore. So that's for me a lifestyle thing. Every trader that I know has a shit life. Yeah, I'll say that. That's pretty fair. So yeah, they have stressful lives, and I don't want that. I want to live a long time. Next question. Harriet says, how many credit cards do you have? I haven't opened a new credit card in some time, so I just have my old legacy cards. I know about credit card churning. I used to do it, get the points and do the travel and stuff. I can't be bothered for the time anymore. It's just not worth it for me in the ways that it was before. But I have a World Elite card. I think we still have an Amex. I have Visa, MasterCard. I have like 5 or 6 that I have from a long time ago, and they're okay. Like I get 1% in points or something. I don't even know. But yeah, credit cards are great. In general, if you're not getting a 1% cash back or points, you're missing out. Because if you're spending, especially if you have a real estate business, like you could spend easily $500,000 or $1 million in renovations if you have a pretty big real estate business in a year. And $500,000 times 1% is like $5,000, right? So that's not a small amount of money. And if you pay for the Amex 2% card, it's $10,000. So that's not a small amount of money. That's free vacations every year, first class, or several vacations in economy, right? So that's like to Europe and stuff. So don't sleep on credit cards. I have been sleeping on it. I should get a better credit card. I have friends that have really good with credit cards, and it's super awesome. I should do more of that. Yes. It's a good, it can be a good return on investment, especially if you run a real estate business where you run a lot of expenses, or any type of business where you run a lot of expenses through the credit card. Plus you get 30 days to pay, which is 30 days of interest-free loan. Again, interest-free loan in this rate environment actually means something. It didn't when rates were 2 or 3%, but when they're like 7%, I mean, all of a sudden interest cost is much higher. And so potentially it could almost be like a revolving operating line for your business. And they'll give you like $50,000 or $100,000 lines. So I do have trade accounts though, like at Lowe's and, Sherwin-Williams and Home Hardware and that kind of thing, which gives me another 30 days to pay. And then I can pay that with credit card, which gives me another 30 days. Although Lowe's nerfed it, so you can't pay with the credit card anymore if you put it on the account. So that kind of sucks. But you get 5% off at least at Lowe's, I think, for contractor stuff. Snake Eyes 11 says, it's a no-brainer for you to start a membership service. The reason software is eating the world is because you write code once and it scales infinitely, creating huge profit margins. Continued. You can't scale in nearly the same way committing yourself to real estate investing. This is facts. Facts. What I should do is find someone who's a young, hungry kid who loves building content and courses, and I should sit down with them and show them what I know and help them write a better program and be both the face of it and, help deliver that content. Yes, it is amazingly scalable, 100%. I'm wasting time a lot of the time on things that are not high value, and I should be doing more of that because that business does scale at $1,000 an hour and beyond. So it is something I should do. I just don't want to do a bad job of it. I want to do a really good job of it. So I have to set aside the time. And it's just about, fear of starting something new and living up to my expectations. Like, am I good enough? Of course, I'm better than a lot of the garbage coaches out there. I'm sure of that. But it's just, plugging into a good system and delivering a good product. And it is low-hanging fruit, 100%. I have a following. I have more than a decade of experience. I have no problems getting in front of a camera and answering questions for hours at a time. It flows off the tongue for me without any preparation at all. And if I do prepare, it's even better. So it's like, this is for sure low-hanging fruit. I don't enjoy being on stages. So like, I know a lot of the good coaching programs also come with like, you have to go do speaking gigs and podcasts I can do, but stages, I can do them. I've done stages. I've been in front of a stage of 500 people. I spoke to a group of, in London, it was like 500 people at OREC, and hundreds in Ottawa I spoke on a stage, but I just didn't enjoy it. Like the night before I had the shits and like I did well and no one could tell that I was nervous, but like the whole day I just felt horrible inside. So public speaking is not something I enjoy. It's, I might be okay at it, but it's not something that the stress isn't worth the money. And money at this point, like, for me to have a stressful couple of days is potentially worth, more than they'll ever pay me. There isn't the money that can equate to that, doing things you don't love, But I do love going on live Q&A. Like, there's a way to monetize this. If I could do this every day, I could do this live Q&A where I walked through investors' deals. They brought their deals to me. I would even go out in the field and I go look at properties. I love that. I do home inspections. I love designs. I love designing apartments and drawing that kind of stuff up. Especially if I had an assistant to actually, like, I'll do a sketch. This is where you should put the kitchen. This is where you put the bathroom. Here you can add another 2 bedrooms here. This is how we relay it out. This is how we kind of walk into the basement. Boom, boom. Like that kind of stuff is like, I love that. I live for that. So if I had a plug and play business that, like, I had an operations partner, so to speak, that did all the shit I didn't want to do, and I just had to show up and do what I love, I could do that. I could do that. So maybe I could see myself doing that. I also love real estate. Like at the same time, as much as I love, going through properties and doing all of that for other people, I enjoy doing it for myself too. Like I'm on vacation and I'm like, we're in Vancouver and I'm like, I want to go look at properties. Or like we're hanging out in like Florida and it's like, I want to go look at properties. I want to go analyze deals. Like I enjoy that. That's what I do for fun. I don't like management. I don't like fighting with property managers, tenants, contractors. That part I don't love. I actually hate that part. I'm good at it. Like, don't get me wrong. I can grind a contractor from like a 10,000 quoted job down to a 5,000 quoted job. And I can bring in 4 or 5 trades and other people will do the job and it'll cost them 50 and I'll get it done for 30. I'm good at getting it done for less. But is that the best use of my time? Like walking behind these trades, it's like a couple $100 an hour in savings, maybe $1,000 an hour, best case. I can make more money and actually enjoy it. Like the conflict of fighting with a contractor when they mess something up and they have to honor it because it's a job quote and they have to honor the deficiencies. That's not a fun fight. I've been threatened to be killed several times. Like people threaten to come back and kill you. Death threats aren't fun, and that's part of flipping, construction. That happens a lot. Some of these trades are hyped up on coke and everything else, and if you haven't dealt with that, you haven't flipped enough houses. And if you've never dealt with that before, you're probably not using the right trades. You're probably paying too much for your construction stuff because you need to deal with that stuff. The bottom half of construction, that's what it's like. They're ass to mouth. They have horrible money management issues. And anyway, so I don't want to get into that, but that's part of the business. It's that part of the business. If someone was good at that part of the business and they enjoyed that, as an example, my brother, I partnered up with him. He does our flipping arm. He's flipping properties like every couple of months. He's a savage. He's so good at it. He and I together are perfect because I find the deal, I finance it, and I split the profit with him, and he runs everything. He brings in the sub trades, he runs. When he's on a site, I have no issues. When I used to run a mentee program, a couple of my mentees were like that too in the early days. And it's like, I don't have to go. I can go once a week and check on them and have some fun and check on the project and do some design plans. And they're doing with all the bullshit and the drama. That model works too. Because there's a slog to it. Where like, and you can make good money. Like you can make 100, 200 grand a year doing that job, being the GC of the project. So you can make good money. But I'm an entrepreneur. And for me, it's not my highest and best use. I can make so much more not dealing with that. And I just don't enjoy it. Some people are good at it. Like my brother's like 6'2", 6'3", he's a big guy. Like no one fucks with him. You know what I mean? Like he's not getting the death threats in the same way that I am. Like I'm 5'11", like I'm 150 pounds. So I'm not like a big 6'3", 300-pound guy. And some of those guys they get violent. They're like, the job prices change from 3,000 to 5,000. And they'll punch their fist through the fucking drywall. I'm like, you want to go? I'm going to fucking kill you right now? And it's like, man, like calm down. We're having a discussion here. You just changed your price. We had a contract. Tell me about the extra inputs. Like, how do we come together to find a common ground? It's all about like conflict resolution. Some of these guys are hyped up on drugs and whatever else. And like, they were maybe the cheapest quote because they have those issues, right? Yeah. So there's a lot of that in construction. Construction is a dirty business. It's horrible. That's why there's so much corruption in that business, but it can be good too. And I do have some great trades that are non-violent, that are awesome. Whenever you're in a new place or you're growing and you're bringing on new trades, you're going to find those issues, right? I would rather use the guys I already know and trust and pay a little bit more to not have to deal with that drama. But it happens. It definitely happens in construction, especially there's miscommunications and things. It's like, ugh. And this, like, most jobs are not like this. My first like bunch of flips were not like this, and you can have good projects that go really well too. So I don't want to like discourage people, but if your focus is purely cost control, you're gonna suffer on reliability or on quality. And reliability really comes down to like the individual you're dealing with. It'll be a more degenerate type of contractor. So, but great point, Snake Eyes 11. You're totally right. I mean, the truth is you definitely do need software or some scalable type of product. You can scale real estate. It can be done. And if I had the right running mate, it could be done. It could be scalable. But you need to bring on capital and you need to do big deals. You don't do small deals. You just run out like 100 unit deals, 50 unit deals, and you can get a huge portfolio going, and it will scale over time. So yeah, I don't know what the right path is, but hey, Will, how you doing? Happy to hear your opinion on the rates. Hey, no problem. Badgery says, is it a good time to sell my single family due to negative cash flow? Then the penalty is $2,200. So there's never a great time to sell and pay a penalty, but if you're underwater right now and you can't hold these properties, it may make sense to dispose of that property, cut the burn. It may go on for another year or two of rates being high like this. And if you're locked into a term, potentially breaking it could make sense. And then when rates do eventually fall, if they get inflation under control, which I think that they will, they've been making good progress. I think this fall we're going to see a regression a bit. And so I'm hoping that's the bottom to buy in again, but we'll see. Who knows? What I do know is that when there's mass panic and fear is the time to be buying. When there's massive euphoria and people are like, hey, we're out of the woods, it's all good, that's when you want to be selling. That said, for the long term, buying and holding real estate, you will always win. It will always outpace inflation. So over the long term, over short periods of time, it may lose to inflation, which it has. In the last 2 years, real estate's underperformed to inflation. But over the last 10 years, it's way overperformed, and it will continue to overperform, again, because there's just so little and population so large. It's so many quality properties and so many quality locations. So supply and demand will drive, I think, the price up. So, all right, next question. How do you handle the risk that tenants stop paying? It's definitely a risk. Even in markets like in Ontario, if you have a new build property, you can kick the tenant out. You can raise the rent as much as you want. You don't have as much flexibility as say like Florida, but even in Florida, I have a challenge right now with a property where we inherited this like tenant, I guess you could call them, on the property that came with the property. And we've been battling with lawyers to get a trial date for like 6 months. And it's ridiculous. Like it's not necessarily, I'm finding any better. And maybe it's because it's a small county and not in a major metropolitan that they can't get a court date. Or maybe it's like we got the wrong lawyer. I don't know. Probably a combination of both. But my experience hasn't matched what people have told me about Florida. So that's just, I'm going to share that with you guys and take that where you will. But you do have rights. And, it is one of those things where tenant versus landlord rights. Landlord rights are much stronger. Property rights are stronger in Florida than they are in Ontario. Hey, cool. We had someone who just joined our YouTube, became an exclusive Rosehart Access member. Welcome. Thanks, Badgery. That's awesome. If you're making $200,000 a year, is it a good idea to buy real estate in your personal name or buy it under a corporation? The answer is much more complex than the inputs that I have. So it's difficult for me to give you a specific answer, but I would say that the cost of financing is lower in your personal name. You will pay a 1 or 2% less interest rate per year. So over a 10-year period, that could be a 10 or 20% total difference on the total mortgage balance. So you're borrowing $500,000 mortgage. That could be a difference of $50,000 or $60,000 over a 10-year period by putting in your personal name versus your corporation. If it is a property that's distressed or needs work or has to be turned around and stabilized in some way, that type of property will have a lot of deductions. And so you can use that in your personal name to offset personal income and potentially pay no tax on your day job. So I did this. I made $60,000 a year salary and I paid no tax for 3 years because I used real estate to defer and offset all of my day job income. So I made 60 grand a year for 3 years, 180 grand tax free because of real estate. I deferred that and I paid it on the capital gain on the properties I just sold this last year. Right before that, I actually sold most of my portfolio off before the dip. So I sold my stuff in the fall of 2021 and I bought more flips and stuff, but the majority of my holdings, my long-term stuff, I sold off and it ended up closing, I think it was January 2022. So I almost hit the peak for selling most of my properties off, which was a great idea. And then I put it into the stocks and lost a lot, but it's probably the same. Realistically, after the whole shorting stuff that's happened, it's probably the same if I just held that portfolio to now. So the amount that I timed it in real estate, I didn't time it in stocks. So shit happens. But anyway, those were my personal name. Part of selling those off was my plan to relocate to the Bahamas and set up my structure there where I won't have to pay income tax and capital gains tax. So that's the goal eventually. However, there's just a lot of inputs. To circle back to your question, I'm glad you're a member, so I'm happy to prioritize your question because you're paying to be part of the YouTube club, I guess, YouTube Rosehart Exclusive Access Club. It's hard. If you have a good salaried day job in your personal name with a good insurance policy is the same as in a corporation. A challenge of being in a corporation is you have bookkeeping fees. Whoa, my phone's gonna die. Shoot, I should have charged my battery. I had 50% battery, 40% battery, and now it's like gonna die. This live streaming in HD is killing my battery. Darn iPhone. It's time to get an iPhone 14 or iPhone 15 when it comes out. That's a business write-off because, you know, this is business. And I live on my phone. Like my only business tool is this phone. I use it more than my laptop, to be honest. So I need to upgrade. That's a mindset shift too. I used to be very frugal on that, and this is one thing that like I don't compromise on because it's my It's like my tool. I'm not gonna use like an old screwdriver when I can use a drill that gets the work done faster and better. So anyway, to circle back to your question, I would say, and if you're watching this, give me a thumbs up, please, because I've been giving you a lot of great content today. The least you can do is tell the algorithm there's a little bit of value here. It's like when someone speaks on stage and you clap, the like button is that. You watch someone, it's like implicit. You have to click the like button. So go click that like button right now. The 40 people watching this, click it. Okay, so yeah, I guess it's a complicated answer. It depends. If you're planning to leave Canada at some point, having your personal name means pain to transfer it later into a corporation. In a corporation, you have additional bookkeeping fees, additional accounting fees, to the tune of, like, if you put the proper structure most accountants recommend is like some sort of 2-tiered structure minimum, where you have, you know, this 2-tiered, there used to be a 3-tiered structure, but now the new, more efficient system is the 2-tiered structure. And to keep those corporations alive, ideally you put every couple properties inside of a corporation. That corporation to stay alive is probably $200 to $500 a month in accounting, tax filing fees, and bookkeeping fees. So there's like thousands a year per corporation. So if you have like 10 properties, potentially it could be 20 to 30% of your cash flow just goes to admin and taxes and bookkeeping to put your properties in a corporation versus in your personal name. So there is definitely additional costs to doing it in the corporation. If you're at the max tax bracket personally, and you've already got a lot going on personally, and you don't foresee, let's say you're buying turnkey properties, you don't foresee any deductions to help offset your personal income, you're planning to make money in this property, then potentially it makes more sense in your corporation, because that's at the same, in your corporation, it's in the max tax bracket as your personal name. So imagine your personal is at the max. That's what every corporation treats rental income as and capital gains as. They assume that you're in the max tax bracket. If you're going to do this actively and flip, you have to flip in a corporation in Ontario. Do not flip in your personal name. They have gone out and made a new flippers tax in your personal name. Do not flip properties in your personal name. Buy and hold in your personal name longer than a year, ideally 2 years minimum, so you can call it a capital gain. I can see the argument to put it in your personal name. Liability wise, it's the same. Insurance policies protect you. So really the big argument for the corporation is financing. Once you've maxed out your personal financing, you get 5, 10 mortgages, the bank starts maxing you out. You can't get any more. Then you have to start putting things inside of a corporation, and it can be a challenge because they'll want all your personal documents every time you apply. But if you isolate properties in each corp, when you go for financing, all you have to disclose is what's inside that corp, those 2, 3 mortgages. They don't care what's happening to other corporations. So for financing, it's much, much easier to put in the corp. But again, there is costs with having so many corporations opened. It can drain some of your cash flow, those admin fees and those accounting fees and bookkeeping fees, and there's corporation fees to keep it alive and whatnot. You have to do annual minutes and all these kinds of things to keep your corporation on the up and up. So yeah, pros and cons. Pros and cons. Mike, in terms of Florida, based on your experience, what are some of your favorite areas to search for real estate? So I don't mean by search for like my favorite areas. I like the East Coast. Again, I just think there's value there on the East Coast that there isn't in other areas. Central Florida is cool too. You know, like I can see Naples and Sarasota. Sarasota is my favorite place in all of Florida. I think I like Sarasota the most, but the prices make no sense to the rent ratios. It's a beautiful, so there are places that I like real estate. As far as like looking for deals, there's like, you can go on Marketplace, you can go into a bunch of groups on Facebook, you can go into, you can call realtors up, there's a bunch of off-market stuff, there's a whole network, so off-market stuff existing. Then there's like the MLS, which is like your basic, you know, stuff. There's LoopNet, there's Crexi. I like Crexi a lot. It's a great platform for commercial real estate. Yeah, there's so many different ways you can look at property, but it's really just knocking doors and talking to people. That's the biggest thing. Hey, thanks, Joe. Appreciate that. Okay. What did success mean to you at different ages? I'll get to that question at the end here. How about that? I missed a couple questions up here, I just realized. So I'm gonna quickly go back up and just try to bang through some of these. So how do you manage, I didn't finish off Hong Kong Fui's question, which was about managing risk. Yeah, there were eviction moratoriums. That was horrible. I remember that. Yeah, that's true. It's true. It was a horrible time. Government definitely errs on the side of tenant, which is again why I like short-term rentals. I don't like long-term rentals. I prefer my short-term rentals because again, the control. And I like having a credit card on file. With Airbnb and short-term rentals, you have a credit card on file. That's really nice. With an operating license in a motel, you can call the police and have them dragged out. They have no rights. So a motel license, as an example, gives you so much power. It's just a great thing. I would say the rest of your question, let me scroll up here and find it. Okay, found you again. Do you keep 1 year of rent for each property? No, I think 1 year of rent is a bit excessive, but you should have, I don't know, at least 3 or 4 months of rent set aside in case a tenant doesn't pay. Have some reserves set aside. It's very important. You have to have liquidity reserves in real estate because real estate is not liquid. It's very difficult to get it liquid. It takes time. So you definitely need reserves. At least, my old rule of thumb for CapEx was 1% of the value of the property. So it's a $500,000 property. You want $5,000 for that property set aside for oh shits. Yeah. Isn't the opportunity cost on that money way too high to do that? Well, again, like you could park that money in a high interest savings account right now and make 5% interest almost on it. So it's less today than it was before. That the way I used to do it was this. I had a line of credit that I keep open and it's there for my oh shits. So that's a great way to do it too, is go to a bunch of banks, get a $50,000 unsecured line of credit. You could open 4 or 5 at once and you have $250,000 in unsecured line of credit. That's enough for, a small portfolio of 10 or 20 properties, right? So, and then that capital is there. If you need to borrow it, it's at 7-8%, whatever, it's there. And you don't want to borrow that money, but there's no opportunity cost. That capital is just there if you need it. And so that's how I've treated my unsecured lines of credits. I can also raise money like that, right? So if I needed a little bit of money, like friends could spot me 50 grand or something. Like if I needed a small amount of money, it would not be a problem to get it. It's different for big money. It takes more. It's harder to raise capital for big deals. You have to make sure you have a quality deal. And I don't know, there's a lot of real estate gurus out there like Grant Cardone and the rest that have horrible deals. Grant Cardone just released his financials on his REIT. Do you know what his average utilization is? A 2 cap rate, 2% yield. His investors are getting slaughtered. It's got to be the worst performing I've ever seen. And people are like, oh my God, I love Cardone's fund. It's like, I guess people just aren't, they just want to feel good about their investment more than they actually care about the return. And he's good at tapping into that. So I don't know. I really don't. As far as how to raise capital, I'm probably doing it wrong. But I always thought if you had a good product, it would sell itself. So you don't need to be a good marketer or a good salesman to talk someone into a deal that's just amazing. So I always just went for like, this is way better than anyone else has. There are no other JV partnerships that have as good of deals as mine. Therefore, invest. And like my proposition was easy, right? But these large funds, what they go at is like, it's passive and it's easy for you and we'll take care of everything. But he has such a large staff taking care of everything that there is no net cash flow. His 2 cap is yielding almost nothing for his investors. They're just speculating on appreciation on his fund. It's like, that's crazy to me. Like how I would never be an investor of his, but there are so many people and so much capital out there. So what do I know? Mike, you need to watch the CBC Marketplace episode when mortgage fraud. It's a great 23 minutes. Yeah, I guess I do. Definitely. Chunk says, are you going to downsize? I don't know. Maybe, potentially. I'm putting in a pool this week, and I put most of the money down for the pool like a year and a half ago. So it's been a struggle to get this contractor to come out and just finish it. He's been so busy. He's like, oh, I'm going to get to you by like last year's. I'm going to get to you in the fall. I get to you in the spring, for sure in April, May, June, then July came. I had to put pressure on to get, like I had to be following up every week. It's a lot of time to follow up with these guys. But I got a really great price in the pool. And so you get what you pay for sometimes. And that means that you don't get it when you want it. I love this estate. I really do. Like I have one of the best properties. Arguably, when I'm finished with this property, it will be one of the best properties in London. Probably a $4 million estate. Like something like 10,000 square feet of drywalled space under roof. 10,000 square feet's a lot. It's going to have an amazing pool, a sauna, pool house, a guest house as well, an 8-car garage wraparound. I back onto hundreds of acres of open land. I have almost no neighbors. And in the front of my house is the city. I can walk over to Tim Hortons, shawarma, McDonald's, whatever. It's all right there. Like literally, I can see it on my front door. Big, beautiful wraparound. I have a beautiful house and I love it. At the same time, Does it make me any happier being here than being at my cottage? I have a beautiful cottage too, and we've wrestled with the idea of like how nice would it be to live 45 minutes north of London at our cottage, until we eventually leave Canada. In which case I'm going to the Bahamas anyway, so this is all a short-term thing. So eventually I will sell this, yes, 100%. I don't know. I could downsize. I thought about it. For sure. Do I need this much space? No. Do I house hack it? Yeah, I mean, it's a good idea to house hack, and definitely this property lends itself well to house hacking. So it's a Rosehart style property. I definitely love it. So, will you vote in the next election? Yes, I voted in all of the previous elections, but did it matter? No. Because on all the previous elections that I can think of, federally at least, even municipally, when I voted, my vote didn't matter. So the party that I voted for didn't win. Hey, we got a super chat. Sweet. Will. How you doing, Will? What's your opinion on BlackRock filing for a Bitcoin spot ETF? I think there's a lot of heavy hitters applying for Bitcoin spot ETFs now. There's a lot of pressure behind that. And what I know is that BlackRock gets what it wants always. BlackRock tended to own the media. They owned the vaccination companies. It was funny, like, I don't want to get down that rabbit hole, but like, there will be, I would say, very high likelihood that the spot ETF gets approved. Bitcoin is the only crypto that I know of that is allowed to trade as a commodity. So, or is treated by the SEC as a commodity. So I think Bitcoin will lead the way, and we'll have a spot ETF, and that will bring new capital that couldn't otherwise invest in Bitcoin directly into the space. So that could be bullish for Bitcoin. There's also the halving next year. Overall, I'm bullish on Bitcoin. Is there tremendous risk with cryptocurrencies? Yes. Could it go to zero, or like not zero, but like, could it go, 10%, 20% of current value? Maybe. Like, could it, the node network, the value of all the computers and the hardware and all that, and the user base is probably worth $10,000 a token or something. That's probably like the bottom price for Bitcoin is my hypothesis. So there is a bottom for it, for sure. It does have tangible, real value in the value of the network and the value of the technology behind it and the hardware that's behind it. There's probably billions more than billions in hardware that backs up the infrastructure. So it's not fugazi necessarily, especially Bitcoin. Other cryptocurrencies, they can go to zero. But Bitcoin specifically will continue to have value. It is a high-risk asset. So I have disclosed most of my Bitcoin position for tax harvesting purposes. Unfortunately, it's rallied since then. I would look to re-enter. Had I known I would lose in this short, I wouldn't have tax harvested because I didn't end up needing tax harvest, but I thought that I would because I had a lot of profit in my real estate business. But here we are. I did write off, and I sold off a bunch of Bitcoin too that I had on my personal, and I'm going to rebuy it inside of my corporation because that'll be for tax purposes much better. But yes, I would say that I am bullish on Bitcoin. Yeah, I could see $100,000 a token Canadian, no problem, in the next 2-3 years. I could also see 15,000 in the next 2 years. So I don't know that the bottom's in. I don't know. All right. Did I miss any questions? Jennifer says, hey, Mike, you're funny as hell tonight. Hey, thanks. Appreciate that. Not sure if we spoke with the interest rate hike today. I did. At the start of the stream, if you go back to the beginning, after the stream is done, go watch that. And I did speak on that. How do you think it will affect real estate prices? So every time they hike, there should be about a 2.5% cut in the price of houses. So Jennifer, we should see a fall in the price of real estate corresponding about 2.5%. Plus we're getting the seasonal correction that's going to come in the fall, winter. So again, I talked about this earlier, but it should lead to a small decline in residential real estate. Commercial real estate is on the verge of collapsing. And I don't mean the residential commercial, I mean like office, retail, that kind of stuff. So that will suffer more. Wow, better? Oh, guys, I don't know if it's any better. I don't know if you can hear me. Someone tell me if you can hear me. Is it live? Do I have to turn this phone off and start again? Hello? Can you hear me? I could, and it's a great point. Could definitely sell the secret sauce. I do have a deal analysis template, and definitely, for sure, it's definitely a way to generate income. Can you have too many credit cards? I don't know. What do you do with an extra $200 a month? It says put in ETFs and stocks. Exactly. $200 a month would not change my life in any way, right? even an extra $1,000 a month right now, even if you give me $5,000 a month right now, it would have no impact on my life. Give me $10,000 a month right now, it would have no impact on my life. I would have to have a significant amount more for me to change my lifestyle in any way. That's funny. Someone just made a funny comment about that. About tenants. Okay, I'm back live. It's working. Audio's good. Okay, my phone's gonna die, so I'm gonna try to be really quick here, because again, the phone is gonna die, and I'm past my time anyway. We've been almost an hour. I'll answer this last question. It's the last one from my friend Chinook, Ivy grad. Mike, 2 quick questions. How do you convert Canadian to USD for your deals in the US? So the way that I would use to convert, there are a couple ways you can use Interactive Brokers to do it, but I currently use Monex. I have an account with them, a commercial account, where they go trade on the Goldman Sachs floor for me. Knightsbridge also does it for you. They're not on the floor, but they charge like a 1% fee to convert. You pay less with Monex, so I recommend those guys. They're pretty good, but Interactive Brokers is the best, and just transfer between a US account. You can just wire it to a US account. Do you do infinite banking? Any thoughts on Ascending Financials? I don't know anything about Ascendant Financial. I never heard of them, but infinite banking is the idea. And I did actually a whole hour-long stream. If you go type in like insurance or infinite banking or something, I did a whole segment on that. And in this environment, the policies are not generating enough that it makes sense. But in theory, you have to deduct the interest. So you get 50% off the interest while the policy grows tax-free. So if it grew at 7% and we're borrowing at 7% on that policy, then in theory you go 10-to-1 invested into the market, into bonds. It can be a really cool thing if you plan to stay in Canada for the long term, then to leave your tax rate 0, the fees are too high. The question is the tax savings, which is capital gains max at 25%. So compared to like an S&P 500 investment, you're saving 25% on tax. Is that better than the compounded fees in the first 5 years? Because there's a lot of fees, and especially in year 1, when you set up those types of insurance policies. But if you can do it in a way where you put no money down, or close to no money down, it can make sense. And I am looking into it. And if I do stay in Canada as a tax resident, or even in my corporation potentially, there can be really good reasons to set it up, especially on like fellow business partners and things like that, where it can make a lot of sense to do it. And you can borrow against that policy, and over a long period of time, it will compound tax-free, and you can borrow against that. That's the infinite banking policy, is that you let these policies go super huge, tax-free, and then you borrow against them without any tax ramifications. When you die, the policy pays out and tax-free to your heirs, clears the debt, and gives surplus tax-free cash to your estate. So that's the idea behind the infinite banking thing. And if you are the kind of investor that's cool with like a 5 to 7% yield, it's way better than a 5 to 7% yield that you're being taxed on. So if you're like investing in interest income in GICs and bonds and T-bills, this is way better than that. But if you're like a Mia, an investor investing in real estate, making 25% compounded annual returns, and it's capital gains tax, so it's like half tax-free because capital gains are taxed much more efficiently. When you compare that, it's really hard to want to lock into like a 7% investment vehicle, even though it's tax-free. But for a small percentage of your portfolio, I do, whoa, okay, I think my phone's gonna die. I do have, full disclosure, I do have a whole life policy that I put money into. It's like $1,000 a month I put into it, and it is building cash value, but again, for me, it wasn't worth it to put a large amount of money into that. So I do have that if I die, there's a payout, and it is growing cash value over time, and eventually it will be worth a lot more than I put into it. But again, the rate of return is very low. It's like a 7% tax-free compounded growth rate. All right, that's all the questions for tonight, I think. Cool. Okay, we're gonna wrap the stream up. As always, the secret to unlocking and wealth through you is 3 levers and control your financial future. You gotta spend less, earn more, and maximize returns and the difference. Those are the 3 levers. That's it. That's how you master your money, you master your life. You live the best life you possibly can by simply mastering your money. So thank you everyone for watching tonight. And if you're watching the replay, smash the like button. And if you want to leave a comment down below, that'd be cool. I do check the comments and read most of them. So leave me a comment. I'll try to respond to it if I can. And as always, thank you for tuning in, everyone. And we'll see you next week, 7 to 8 p.m. Eastern Standard Time, every single Wednesday. I've never missed a stream, whether I had COVID, sick, whatever it was. I've always managed to make it on the platform. So you can probably count that I will continue to make it on the platform every Wednesday for the foreseeable future. And if you miss it, it's okay, because it goes on playback for you to watch anytime you want. So anyway, bye everyone. We'll see you next week.